All right. Hey, everyone. Welcome back to Quest for Alpha. So today is February 1st, 2026. If you're new here, then a very brief background. I come from an engineering background. I work a full-time job, and trading is something that I do alongside. That is because it's a passion of mine. I enjoy studying the charts, finding opportunities, and, building a process that fits into a normal but busy life. Most of what I do is driven by technical analysis. I do follow the broader markets, and I am curious about the fundamentals when they matter. But when it comes to the decision making, I rely on structure, on trend, and on price behavior. The reason for this channel is pretty simple. It is so that I can document my approach and keep myself accountable over time. If anything I share helps you think differently or gives you a useful perspective, then that's great. But the focus here is always on process, and it's really not on hype. So my trading framework or system is pretty simple. What I want to make sure I see on the charts is the right direction. On the higher time frame, I start generally on the monthly. It can be different time frames, but my preferred timeline is the monthly. I'm looking for an uptrend. And an uptrend can easily be seen, but I do confirm it with 3 EMAs, 10, 100, and 200 EMA. And then I look for a pullback, something like what you see here, a pullback to a very strong demand zone. And a strong demand zone is defined by having a bearish candle, having a pretty explosive move higher that generally takes a previous high. For example, Corteva here took a previous high, and there were very strong bullish candles that were formed. In this case too, sometimes they can be a lot more. One is not something that I consider strong enough move so that I can characterize a good demand zone. In this case, this was an adequate demand zone. I wait for the price to pull back, and then I don't take an action. I go to the daily time frame and I wait for a confirmation. In this case, the confirmation after the price came to the demand zone, it started to consolidate here in this region. Between the 200 and the 100 EMA. And then once the price reaches above either the 2 or the 100 EMA, whichever one is on higher, and it closes above it, I generally make the decision to enter a trade, and I stay with it until I reach at least a 2-to-1. And then it comes down to trade management. There are many different methods of how you can manage your trades. I generally speak about 2 different methods, and I'll cover them a little bit later. So like every weekend, let's start going through some of these charts, what worked, what did not, and what I'm watching going into next week. After that, we can review the portfolio and see how things are tracking. All right, so the first one is Corteva. You can see it's moving pretty nicely already in an uptrend, which is great. Corpay. So Corpay was doing well. It came back to the break even, bounced up, and it didn't have the strongest week, but it's still in profit. So we're still tracking that one. IR is doing okay as well. It's still in profit. Hopefully in the next week or so, we'll see it reach at least for this high, or maybe even reach our target. So far, so good. TransUnion actually collapsed. So this is where now I'm thinking about exiting the trade. I haven't exited the trade yet. I'm anticipating that what I'm going to see here is some sort of consolidation, and then the price can either come back up here, or it's going to decide to break that consolidation and come below. And this comes to trade management. Right now, personally, I wouldn't exit the trade. If you want to have strict rules, then it's really up to you. But if it does break down here and it closes below, then I'll most probably exit this trade. Ares, this is something that collapsed. It came down here. I was hoping that it'll consolidate in this region. It actually had another strong move down, and I exited here where this arrow is. This is one of the trades that you can see now it's consolidating. It can pull back up, but you got to make a decision and you got to stick with it. So this is a loss. Now, these 3 are, so we're going to move Ares first of all to a losing trade. previous close trades. And then we are going to focus on these three here. These are new setups that transpired last week. Equinox was a trade that I had entered in the past. There was a nice consolidation. It broke above and closed above it, even though it was a bearish candle, but then it collapsed down and I had exited. And now it is coming back again. There was a nice consolidation, a break above it. This is an entry point. So we're going to target the 221. Novo Nordisk, something I had already considered entering last week. I published a short about it. It is not something I take a huge risk on, but decent consolidation. It came above it, closed with a bearish candle. I waited for the next day. Next day, it did come bullish and stick here. And maybe I was lucky or so. I wasn't really following it that closely. The following day, I saw that there was a little retracement, and I actually ended up entering right over here. So I'm still in the negative. It is settling down here. I'm hoping it's going to go higher. Lin is another new trade. You can see that there was a nice bullish candle here. So this is what we want to see, like a really nice closure above the consolidation and above the 200 EMA. And this one right now, it's in profit. The other two, I think I'm probably going to remove them. These are trades that were on the watch list, but I really never entered. I never really noticed them until it was too late. But you can see that following the same type of system, they did pretty well, especially Teledyne. Look where it is here. It is already making a, well, it made like at least 4-1. For those that are still ongoing, Dover is settling somewhere over here. These are the ones that had reached the first target at 221. We can call one of the strategies where, like strategy 1 or strategy A, is where once it reaches a 221 target, you remove 50% of it and you let the rest run until it comes to a break-even point here, and then you exit the trade. Dover is still in it. Waters Corporation, we are still in it, still in profit, although it did come down a bit. Merck is doing pretty good. It is above the 2.1 risk. Regeneron Pharmaceutical, see, not much change from last week. Vertex actually went all the way back up and then retraced a little bit on Thursday and Friday. ALSN is doing very well. This is already at a 3.4. And FCNCA, we saw last week it came down, settled, and then on Friday it had a very nice strong move. So we're still in it here. So anyways, these are the trades I was actively being involved with, and the three over here that are very new as of late last week that I've entered, and I'm going to continue to manage them and take a look at how they're behaving. All right, so now let's take a look at the portfolio. Now, up until recently, I was tracking everything using a pretty manual setup. If you remember, I had these three tables: active balance, realized profit and loss, and realized profit and loss. The difference between the first table and the second table is that the first one still monitors the trades once they reach a 221, and they continue to be active until they come down to a break-even point, while the second table was the one where once it reaches a 221, we close the entire trade together. Now, this method worked, but it was very easy to introduce mistakes, to double count trades, to miss entries, and make small errors that, can add up over time. And it took some time to update this table. So what I've been doing is working on a new portfolio tracker. It was pretty involved in getting it built, but the key benefit is that going forward, it's going to be much easier to update the week to week, and it'll be a lot more consistent. More importantly, it gives a clearer picture of how different strategies actually behave over time. And in this case, it's really around the trade management. So we have strategy or outcome A and outcome B. This is where you decide to stay in the trade once a 2-to-1 risk to reward is achieved, or you decide to close the position altogether. And these are basically some of these columns between outcome B and outcome A and what you end up deciding. But this tracker would not only allow us to compare the two different exit strategies using the same type of entries and the same risk assumptions, but I can use the same Excel spreadsheet or portfolio management tool to add to additional trade management approaches. And I'm hoping to talk about some of these in the next few weeks or so. So when I tracked these manually in the previous Excel format, the results between the two strategies look similar, but they weren't exactly the same. With the new tracker, those differences become a little bit easier to see. And to give you a rough example, and this is just illustrative, okay? If we do take this assumption where we risk $200 per trade, total investment per trade is also around $3,000, then over a 3 months period, so starting in November, we are going to see next week when I make an update for February 8th and then the following February 15th, how this will behave. But the first approach, which was doing a lot better at some point, and the first approach was when you get to a 2-to-1 target, then what you do is you remove 50% and you let the rest run. That one today converts to around $537 gained. Okay, approach B is where once your target reaches a 2-to-1, you close your entire position. That one turns out to be around $1,000. Now, what does that mean in percentages? Because you always want to take a look at percentages. If you follow S&P 500, over the years, in average, it returns around 10%. Let's say in the recent years, it has been a lot greater than that. This one, in a 3 months period, strategy A, the first one, returned around 3.5%, while approach B returned around 7.2%, which is not that bad at all, really. If you take a look at the SPY index, for example, and the NASDAQ index, since November 1st, these are adjusted for risk. You can see that that one returned around 0.5, 0.6%, while the NASDAQ is negative 0.3%. So again, this isn't about proving anything or declaring a winner. It is simply about putting different approaches side by side, using consistent assumptions and seeing how they behave over time. This new tracker is something I'll continue to build on. And as the data grows, it should give an even clearer picture of what is working, what isn't, and where we can make some adjustment. That's it for this week. Thanks for sticking around. If this kind of structured, realistic approach resonates with you, then feel free to check out the rest of the channel. I will see you in the next one. Bye-bye.